Good morning, everybody. Welcome to today's 1Mby1M Strategy Roundtable for Entrepreneurs. 1Mby1M, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of that mission, we do these free mentoring roundtables every week, week after week after week. This is the 574th session. We started way back when in 2008 and have consistently, had these roundtables with guests, with entrepreneurs, with mentoring, with covering interesting, important trends, and so on. The event is being recorded. Every single recording is available on our YouTube channel, 1M1M Roundtables. On Twitter, we are at 1Mby1M and at Stromana, or hashtag today's 1M1M. These are the call-in instructions. This is a roundtable, not a broadcast, so we want you to participate. But we first have some scheduled programming. We're going to start today's session with a conversation with Bill Baumel, Managing Director of Ohio Innovation Fund. Bill, welcome to the show.
Great to be here. Thank you.
It's been a while we haven't talked, so I'm looking forward to catching up on what's happening in your quarter of the universe.
Yes, yes.
So let's start with some introduction on where you are with your work with Ohio Innovation Fund, what's happening in Ohio as an ecosystem in general, just some overview.
Sure, glad to. So since we last spoken, we've invested in about 20 startup companies here, primarily in Ohio, although we do look towards the Midwest as well for similar type opportunities. We're seeing a lot of, we typically invest at the Series A level. At times, on a selective basis, we will invest at the seed level. So we're typically getting involved with companies when we invest around $1 million or so to own 10 to 15% of the company and kind of get them off the ground. Seed companies we may put a few $100,000 into. And then we work very actively with them because unlike Silicon Valley and Boston and some other areas, both nationally and internationally, there's not a huge cohort of previous successful entrepreneurs here, or even kind of the understanding of startups in general. Whereas in Silicon Valley, someone's mom, dad, sister, brother, roommate, friend may have been involved with startups. You kind of understand what it's all about and all that. So there's a lot of both strategic, operational, educational working with the companies. And we've been pleased with our success so far. We typically, our initial investment, most of our companies are relatively capital efficient. We realize that, hey, for every dollar you put in, you better create 10, 20, $30 million of value, if you want to have a strong return for the founders and the investors. And we've been pleased that over a third of our companies have already graduated from our initial kind of 7-digit valuations in the seed round or Series A round to 9-digit, and in one case now, unicorn status in subsequent rounds. So that's been very positive, but also the business momentum is behind that, which is good because here in the Midwest and in Ohio, there is a lot of focus. We've had to make people, obviously a lot of educational, operational, strategic help, making the teams think bigger to realize what their true potential could be and trying to fulfill that potential. But yet at the same time, you have a very capital efficient model here where not only the valuations are lower, but that amount of money taken to get anywhere is lower. So we have companies scaling to 10, 20 million plus in revenue off of their initial 1 or 2 financing rounds. It's not taking hundreds of millions of dollars to get there. It's taking millions, or at most 10 plus million. So the returns we're seeing on our investments are very strong. We have had 3 exits so far. One in HR tech, and then one in there's one in the med tech area as well, which was interesting because only $10 million went in the company in total, and it exited for north of $400 million. So the type of return we're seeing in those cases where basically, we're looking at very strong returns given the capital efficiency and the, and the progress and the exit valuation. So that's what's nice here is that, you can have a few $100 million or even $100 million cybersecurity company sold, and you can make a large amount of your money because it did not raise 100 or $200 million like on the coast. It was much more capital efficient, much more deliberative, and much more kind of financials focused in terms of growing ARR and customer base. So it's been good so far. Overall, on track on this fund to return about a little bit over 5x on the fund, which within our universe of opportunities here in Ohio, the Midwest is kind of as strong or as at the top funds performances on the coast. So we're pleased with that as well. We've already returned a majority of the fund, and most of our investments are only about 3 or 4 years in, because I think when we first talked a few years back, I was just getting started. I'd come from Silicon Valley and spent 20 years out there and had a number of exits, but kind of coming back here to bring that to the Ohio, the Midwest, and we've really seen that develop there. We had to start pretty much almost from scratch with a lot of these opportunities, and start with a group of 3 or 4 entrepreneurs and really build things up. So it's been a lot of fun as well.
Bill, well, how big is the fund?
It's an institutional fund. Our LPs, are sensitive to anything being disclosed outside of what's in the SEC forms, but we typically don't go over $100 million in our funds, because then, in terms of capital efficiency, selectivity, that becomes an issue. And there's a couple things. One is, too big of funds, you start getting motivated by management fees and not carried interest, and so your interests aren't necessarily aligned with the companies in terms of that focus on overall impact and return. And second piece is that if we are doing more capital efficient and selective investing here in Ohio, the Midwest, so we don't want a huge fund size that gives us pressure to deploy more and more capital into more and more companies, into each company and into more and more companies. But we'll typically invest up to about $4 million in a company over time, $4 or $5 million.
So you said earlier that your preferred funding round is Series A, where you put in $1 million or so in that round, and in some cases you do some seed investment. Could you talk about how Ohio entrepreneurs are getting to Series A? Is there a seed ecosystem that is supporting, or is it more a bootstrapping tendency or bootstrapping culture that is going straight to Series A?
There's a little bit of both. There is a legacy kind of government partnership model that we don't have any government funds ourselves that has in the past, and it continues to be active here. But more and more, as we've had more and more successful exits, successful entrepreneurs, for example, in our one company I was talking about, that med tech company that exited for $400 million, just raising $10 million of preferred stock. That's actually an Appalachian portion of Ohio. And that created 47 millionaires in Appalachian, Ohio. And so now as things, as we have more and more exits and such, there's more and more angel investment around, which I'll call more pure, angel investment. And there is a lot of bootstrapping as well, but we do go back to the seed round as well and provide the initial capital. We've for example, spun a cybersecurity company out of Ohio State, actually a PhD from MIT, Professor Emery Coxwell, into Data Anchor, which actually has now, first seed money of a few $100,000 got the product done. The next seed money of a few $100,000 has landed our first 25 customers. So on basically about a million or so total, we now have a company with 20-25 people and with about going on 30 some odd customers and quite a few major partners as well. So we are we do that seed stage selectively, but there is a pretty decent and robust angel network starting to develop, similar to a little bit on the coasts.
And the medtech company that has had a solid exit and has created a lot of wealth in the community, what path did that travel? Did it raise seed money, or did it bootstrap up to a point where it was able to attract a Series A? What was the trajectory of that company?
It was bootstrapped for a number of years. It was bootstrapped with some angel investment, some local angel investment, which is what created all the number of 47
Mm-hmm.
employees and investors, individuals, but primarily employees, staff. But then we came in as the first institutional investor. And really did a bulk of the the investment of that the largest portion of the 10 million investment. Brought in a few other of our partners into that, and basically just took that one major institutional round to get all the way up to about $100 million run rate from where it started, which is very very small.
What is
Um,
the business?
what's that?
What is their business? What is their business?
Pharma companies such as Pfizer and Merck and
Bill,
Moderna.
sorry, you kind of froze for a moment. So could you rewind a little bit? I asked you what is their business, and then the screen froze.
Oh, I'm sorry. Yeah, so it's in the cold chain logistics and cold chains providing
Oh,
for
okay.
pharmaceuticals and for vaccines and those sorts of things.
Okay, terrific. And geographically, where is the bulk of the work happening, entrepreneurial work happening in Ohio? Is it in Cincinnati, Cleveland? What's the, you know,
E- e-
what's the
e-
geographical footprint of startup activity?
Yeah, yeah, there is. I mean, there is a decent amount of what I'll call advanced manufacturing in Athens. Particularly applied to med tech, which is the Appalachian area. Within Columbus, there is quite a bit of enterprise software, data science, cybersecurity, SaaS, fintech, and
Mm-hmm.
such. We have companies, here, data anchors here in the cybersecurity area. Aware is here, which we had a single-digit pre-money valuation on about 3 years ago, 4 years ago. Goldman Sachs just led around at about 10 to 15 times our initial valuation and put in about $40 million in the Series C as we continue to grow and expand. We have data science companies like Amuta here. So that's kind of, a Columbus. Cincinnati in the Mason area, which is just the north suburb of Cincinnati, has quite a bit of med tech activity. We have a company
Mm-hmm.
called Enable Injections there that does onboard drug delivery. We have another company that does scanning for various diagnosing various types of heart diseases. There is some SaaS down there as well. With Procter and Gamble and Cincinnati too, there is a little bit more consumer type tech
Mm-hmm.
down there. And what I forgot to mention about Columbus as well is I know with your group it's mostly on the tech side, but there is a robust kind of biotech community forming here because there's like Nationwide Children's Hospital and such who 5 years ago was not spinning out cell and gene therapy and other type opportunities. Now they are. Cleveland historically has the Cleveland Clinic and a pretty strong med tech, but we're actually one of the companies we exited was a HR tech company up in Cleveland, providing
Mm-hmm.
onboarding, SaaS type onboarding, next gen type services, and that company was a nice exit, very capital efficient, made a nice return on that. We also have a fintech company up in Cleveland that is in the embedded finance area. Actually, one of their new partners is Coinbase. And that's another thing we're seeing kind of throughout Ohio is that when I mention some of these companies like Enable Injections, we actually are having a lot of our partners, strategic partners, get involved closely with the companies because they like what we're doing and also invest the companies. So, for example, Sanofi led the Series B at Enable Injections. Obviously, I mentioned Coinbase is very close with Alvieri up in Cleveland. We have a great relationship here in Columbus, Aware with Microsoft and Slack / now Salesforce. Amuta has great relationships with like the Snowflakes and the Databricks. So we're seeing that as well. But when you combine all the three kind of C's together, Cleveland, Cincinnati, Columbus, and you add in Athens, actually some decent good activity in Akron, Dayton, particularly with the Air Force Research Labs there. I think I mentioned Akron and Toledo. There's a pretty robust environment developing here where we actually just had an article the other day, and this is for the Cincinnati portion of it. There's just as much, if not more, happening in Columbus as well, but where there are actually three companies competing not just to be unicorns, but to be decacorns going forward. Three startups. Enable is one of those. So there's it's a lot different when I started here 5 years ago when I kind of said I didn't know what I was getting myself into, and kind of, it's turned out to be a great experience, and it's kind of just fed on itself.
Well, it's really great to hear about all this activity. We have seen many ecosystems come up through our work, and we've tried to cover a lot of these companies and ecosystems. Utah is a very good example. They're a bit ahead of you because they've had a lot of exits. They've had, really sizable exits, and that has created a very good angel and seed money pool and it's a naturally entrepreneurial people. So it's done very well. They've built very good bridges with Silicon Valley. Ohio probably has better bridges with New York and Boston than with Silicon Valley. But right now, also things have changed in Silicon Valley. There, as you know, before people used to want to only invest in local companies, and now that's not the case at all. And investors are very happy to invest in companies as long as the business models are proven and are venture scale business models, both venture scale acceleration and venture scale TAM. They are willing to invest in companies anywhere. So the globalization of entrepreneurship is in full swing right now. So I'm not at all surprised that Ohio is doing as well as you're describing the nuances of, and it's wonderful to see that. And I think the capital efficient ethos is very much in sync with the way we think about entrepreneurship, especially in the beginning of an ecosystem. Capital efficiency is very important because when there is not as much money in the ecosystem, it's by bootstrapping that you start bringing companies up, and then you start attracting some funding, then exits happen. So you're further down in that cycle, and that's terrific. Now it's going to snowball big time.
Yeah. I'd like to add one thing to what you said there in terms of the willingness of those in Silicon Valley and Boston and elsewhere to invest in Ohio as it grows and becomes, provingly profitable and all that, and just given the level of competition valuations on the coast. We're finding there needs to be a balance in that. You do need a strong local partner to kind of work the day to day. And so it's a balance there in terms of when you bring, when you bring those funds in, because a little bit too early and you start going, oh, well, geez, we're going to do quarterly board meetings and one's going to be on this coast and another's going to be on that coast and this, that, and the other. When the company is not at that point of kind of proven scalability, that can be difficult. And because it's still, kind of in the seed stage and Series A stage, and depending on where you are at the Series B stage, there's still a lot of work to be done in terms of, you've established some initial product market fit. You're still on the messaging side, expansion side in terms of what sectors to expand in. I mean, they're, building out the team, scaling the team, getting the right people in place. There's just a lot of work still yet to be done. So that's one of the balances. And actually, the other interesting thing is that it's almost switched here, where before it was like, okay, we need to raise a little bit more than you're thinking about as an entrepreneur here in Ohio to achieve what this company can achieve, to almost the opposite and saying, okay, for example, we had one company that had raised, let's call it 10, 15 million, and had a multi-$100 million exit opportunity. Actually, a couple of them come on the table. And the entrepreneurs and we as a company chose to go forward with another round instead, to try and achieve, we believe we can achieve more from there. But we had to very clearly articulate and make people understand that if you're going to take another round of $30 million on or something, you need to create at least 300, if not $600 million in incremental value to justify that round. And that's right. So that's always the case where, and so there's a lot of people right now celebrating, I raised $25 million. Okay, well, you can't talk about a $50 million exit anymore than that. You better be talking about a $250 million to $500 million exit potential. And then what does that mean operationally in your operational plan in terms of the ARR, or what metrics you need to get to, and who can buy you for that, or where, or if you can go public at what point for that. So that's kind of a little bit of a shift over the last 5 years in Ohio here.
And what is how many funds are operating in the early stage, the seed stage, Series A, how many funds do you have, and how much like capital is available as a pool?
It's, there's ourselves is, I think we have 20, we're probably the largest and most focused on the Series A stage. There's, each location will have an angel group or a couple angel groups. There's an angel group a few of them in Cleveland, a few in Columbus, a few in Cincinnati, in Athens, and Akron, Dayton, and Toledo. There's one other Drive Capital is here, but they tend to be a little bit later stage, and they're going a little bit all over. They have some investments in Canada, Colorado, Washington, a few in Ohio as well. But we're pretty much the primary one focused here in this area right now. But we are seeing more, obviously early on strategic partners wanting to co-invest with us. Cardinal Health here in town was one, as well as I'd mentioned the Santa Fe's and others, on a more international basis. But we're seeing more and more people wanting to join us in the Series A, where they say it's a model where, okay, we appreciate what you've done here. You've done a great job, and we trust you kind of as our boots on the ground, or as our kind of day-to-day partner here in Ohio. And then that was a case of Data Anchor. We actually have some investors both from Silicon Valley and from kind of the Western, Salt Lake City type areas you talked about. But we are the ones kind of day to day working with the company from that perspective. So we're seeing more and more people.
And how many entrepreneurs are we talking? What is the pool of entrepreneurs that are circulating and operating in Ohio right now?
Almost in our investments, almost everyone is a new entrepreneur that we've dealt with. There's one fellow, Mike Hooven, who took AtriCure public. It's now a few billion-dollar company, and he's CEO of Enable Injections. But other than that, a lot of this is, and one unique things with that is that the founders are very mission focused and have a lot of fortitude because they're investing what they believe in. So it's usually someone has a problem. Jeff Schuman at Aware is working at Nationwide, and he's trying to roll out Microsoft Yammer. And there's all sorts of compliance questions and this, that, and the other. Well, let me create a cybersecurity compliance risk management SaaS platform for the Yammers, well now Microsoft Teams, and the Slacks and the Cisco WebExes and such. And then I turn that into adding data analytics, and so that's usually how entrepreneurs are born. But as far as the deal flow, so that's kind of where they come from. As far as the deal flow, that has increased dramatically, and particularly in terms of quality deal flow. There's more and more people with good ideas.
What are we talking about? Is it like 500 startups at any given time, 1,000 startups, 8,000 startups? What's the ballpark? No, not exact, but what range are we talking?
I'd say probably there's now a few hundred.
Few hundred?
Yeah, a few hundred. I don't know whether it's 150, 300. I mean, somewhere
Somewhere in that ballpark.
yeah, in that range. There's probably, if you want to look at startups that are, have really made some great progress, I don't know whether that's 50, 75. Right now, kind of currently operating, that probably started a few people that now are at 10 and plus revenue on the on the ARR side, in terms of if you're on the tech side, or are pretty far along in FDA or clinical trials or what have you on the med tech side.
Very cool. Very cool.
Let me say one thing to that. I'll give you an idea. When I first got here, the growth company of the year in Ohio was doing about $5 million in revenue. That's 5 years ago. Now, I mean, there's companies that we have companies doing 25, 50, I mean, $100 million in revenue. So that's kind of been a huge change.
Huge, yeah, that's huge. Well, it's wonderful. I think it's going to be, a big snowball effect from here on. So you've done great work, and the community has done great work. So it's great to see the progress.
Yeah, no, it's been fantastic, and I think we're happy with the progress of our companies and how broad based it is. That we will likely have a majority of the fund, about 12, 13, 14 of our 20 companies exiting successfully. Some at 2 to 5x, some 10x plus, some 20x plus. That's very So it's not just one. It'd be nice if have a 5X fund to have one huge winner or two huge winner. That's great, but to have a broad base throughout, both kind of throughout the region as well is kind of validating. And then those companies, as you know, the founders, the CTO go off and do this next, and the CEO go off and do this next, and the product person will go off and do that next. So like you said, that snowball effect.
The usual cycle of people learning in one company and then going on to find their own. It just takes time. That's all.
Yep. Agreed.
Very good. Wonderful work, Bill. Thank you for coming today. We will switch to the next segment, which is an entrepreneur pitch. So a little bit of expectation setting. This is a safe working session. Absolutely no other agenda other than helping entrepreneurs move forward. And if you disagree with my feedback, that's just fine. It's your company. You will do whatever you want. And, we will have a candid conversation. However, I'm not going to sugarcoat my feedback to you. So Boddu Venkat Sujith from Visakhapatnam, India. Sujith, right? You call yourself Sujith?
Yes, Ms. Mitra. Pleasure to meet you.
Go ahead. Please go ahead.
Again, before starting, thanks, William, for the wonderful session. I think it went. All right. So I think we are good to start. For myself, I'm Sujit, and this is my company, which I started, and it'll be operational from September. It's called CaterBite. So what exactly CaterBite is? So CaterBite is a marketplace for caterers. It's simply a marketplace for caterers. And before explaining about the company, I'll just give a background of myself. I'm a student entrepreneur, and I'll be fully entrepreneur within 20 days because I'll be graduating in 20 days. And I have started companies before as well. I have started my startups before in my college itself. It's called Jigsaw. I'm into EdTech. I worked in different companies during my 3 years of graduation itself. And this is my co-founder, Mr. Hitesh Pritham. He is working with me since 3 years. Even he has a background of technical background, which is unlikely. I don't have any. Again, tech and a peer person who is into entrepreneurial mindset makes a good team. That's why we have chosen it. So what exactly the problem we are solving? Generally, people tend to use easy ways, like Zomato did. Zomato have pinched the problem. So until unless Zomato has solved that problem, we don't even know that problem exists. We simply go and take the takeaway and come to the houses. But until unless Zomato habituated people, so people are so habituated that they can't really go to the hotel and take the food. So they're sitting in home and just ordering up. In the similar way, there is a catering industry which is completely unorganized, and it's a very, very big industry in India, which is 98% unorganized, and caterers get orders, but they don't even have an establishment. People don't know other caterers. They are very, very limited. So by solving this problem for helping caterers, we have come the solution of CaterBite. Next slide, please. So CaterBite is a marketplace where we will be having caterers and we deliver bulk orders. I can simply say it's just an Alibaba instead of Amazon. We deliver bulk goods, we bulk orders to people. And it's a marketplace. We market for caterers. It's a one-click go for customers. Our mission is to serve the best delicacies to customers via caterers. No matter what occasion you have, CaterBite provides you the best caterers in your boundary. What are the benefits of joining us? So you'll be having all the pool of customers in our hands. Though initially it might be difficult to have a lot of customers in our hand, but still people are used to tech. People are used to these applications. People are used to Zomato and Swiggy in India. So for ordering a lot of catering meals, they will be having an application which will be solving their problem. They can just sit in their home and go in a one-click go. But there's a problem here. You might think that why would people order 1,000 meals for an occasion? And why do you think they'll risk on ordering from a new customer? Because from a restaurant, you can try a different food. It's only for yourself, but you can't really experiment for your occasions. Your occasion might spoil if the food is not good. For solving this, we will be sending a sample. people can order samples before they're ordering their bulk order. So that's the main purpose. People can happily sit in their home and do this process. We will be doing this process for them. For caterers, it'll be a great benefit. They'll be getting their marketing. They'll be getting their, they can generate more revenue from here, because when you buy a Coke bottle on an outside can, it's just 20 rupees. But if you buy the same Coke bottle in a restaurant, it's 100 rupees. But still people buy, because when you see those this tech applications, people's mindset will be thinking that this is the greatest thing, where we can have trust into it. So that's the main model of why people will be ordering from CaterBite. Customers will be having the liberty to choose. They'll be having complete transparency on menus and prices. They don't really need to call someone. Everything will be on a one-click go. They can request for samples. The restaurants and caterers will be on-time catering will be available. They'll be having a delivery option as well. CaterBite will be delivering for them. The planning of the menu, they'll be having the customization menu also. Everything will be on a one-click go again in the application itself. Next slide, please. This is the customer app feature. This is the general customer app feature, where they'll be having the customer.
What is your current situation? Is this a company that's already operating? You said you were already you've already bootstrapped and you're already working in the business, right? Did he drop off, Maureen? Well, while Sujith is figuring out what he's up to, I see Zansaya in the room, who is a premium member. Zansaya, do you want to talk about your business today here? You can either use public chat, or you can also turn the computer audio on and interact with the computer audio. Sujith, you're back. We lost you for a bit.
I'm so sorry. My network is very, very terrible here today. Extremely sorry.
So I was asking you the question.
Yeah.
Are you already in business? Is this already operating?
No, it is incorporated, but it will be operational from September.
I see. So it's a concept stage business. Got
Exactly.
it.
We are developing. We are developing the application and website right now.
And where are you going to launch? This needs to be launched location by location. So where are you going to launch?
It will be Visakhapatnam, because we have a good base. My father is a businessman and a politician over there, so we have a very good network and a base over there. So I recommend to start in Visakhapatnam, and the next will be in Bangalore, because my co-founder has a very good base in Bangalore, and Bangalore is a really good city to start something.
And how much can you do in Visakhapatnam? How big a business can you build with just Visakhapatnam?
Yeah. I don't know whether you know about Visakhapatnam or not, but I guess you are from India, right? You're from Kolkata, I guess, if I don't.
Of course I know. Of course I know Visakhapatnam.
Absolutely. So Visakhapatnam is a really developing city right now, because it is declared as a capital. It's officially as a developing.
No, I don't want to. I'm not asking generalities. Have you done a bottom-up TAM analysis on Vizag? That's my question. Yes,
we have spoke with 200 caterers in Visakhapatnam already.
That's not a bottom-up TAM analysis. I'm asking you a TAM analysis question. Do you know what a bottom-up TAM analysis is?
You were asking about the market.
Yes, TAM, total available market sizing.
Yes. The market size, the market available in Visakhapatnam is around 15 to 20,000 of marriages every year. 15 to 20,000 of occasions or marriages every year will be having the market of Visakhapatnam. So because due to COVID, it increased as well. Because COVID, again, 2 years, they have stopped doing any occasions. So it increased, the numbers are increased.
So if this is a pitch for investors, it needs a lot of work. It's missing important pieces of how you raise money. And I don't think you'll be able to raise money with a concept. You're going to have to, do some work, get this launched, get some movement, get it validated in Visakhapatnam and so forth, and then you may be able to raise money. But even the money raising pitch has lots of gaps. You're going to need to work on the pitch.
Of course, absolutely, absolutely.
Yeah.
Just here for the
So
feedback.
I understand what you're doing. We've seen, I mean, this category has done very well in the US. There's a unicorn in this category. You must know about EZCater, right? We've covered EZCater in 1Mby1M. So I don't have any problem with the category. The category is validated. But I think you're going to need to, two-sided marketplaces are not cheap to build. So you're going to need to figure out how you're going to validate and then put together a pitch that is a fundable pitch. I think the opportunity is there. I have no concern about the opportunity.
Okay.
But you have to convince investors that you are going to be the company to back, and none of that. Right now, based on what you're presenting here, it doesn't have enough of a, it doesn't have all the elements of a pitch.
Absolutely, I understand. Really, I mean, the feedback which you gave is very, very important for me, because that's what I came here for. This roundtable.
Yeah, go look at the self-assessment on the 1Mby1M website. It's free, and it has the due diligence questions that investors ask. So typically, we ask people to frame their pitches around those questions so that all those bases are covered in the pitch itself. So I understand your business. I think it's a good business opportunity. What is the competition? Are other people doing this?
Not really. I mean, it was surprisingly. I mean, EZCater is the very, very big unicorn in USA. I mean, after I got this idea after my research, EZCater is doing extremely good in USA. But when it is coming to India, there are very negligible numbers. I mean, negligible companies which are doing this. There is a company called Home Foodie, but it's the secondary business. What they're doing is this catering, but they're not really entering into the catering industry. They're morely focusing on the home food, which they're doing.
But there is no catering marketplace like EZCater. There's no EZCater comparable in India? Yes?
No, not really a marketplace. But they are more involving into the takeaways.
That's good.
Yeah.
That's a good place, because there's some categories that are so overinvested right now in India. There's a lot of concept arbitrage going on, and there's many categories are very heavily overinvested. So timing-wise, this is good that it's not overinvested. So you need to very rapidly get your validation work done and get your pitch teed up so that you can go raise money and establish some market leadership position. Happy to help.
Yeah. Shravana, I have a question, if I can ask.
Yeah.
I want to put this startup, not exactly, I mean, at least in the initial years, not exactly to get investors, but going with the customer funding. I think that's the main important thing, because I want to bootstrap everything. What I put, I'm doing a bootstrapping business, and I want to bootstrap the money, and I want to go with the customer funding, not getting the investors, because I feel investors will be diluting. I will be diluting a lot of equity. I'll be diluting a lot of.
If you go to investors too early, yes, you're going to be diluted heavily. Absolutely. So it's always preferable to get some traction, some momentum going before you go raise money. You follow me, so that's
exactly
my belief.
Because like my vision, I mean, I got this idea of like going in this way. Then after I have seen you talking about customer funding, talking about bootstrapping, and talking about not getting invested in an issue. That's why I have messaged you on the LinkedIn as well, because the ideology matches. However, my startup wants to grow. I mean, the ideology matches. That's the only thing where I've been in this roundtable to take your feedback, to take your raw feedback.
Yeah. So you can start using 1Mby1M to learn how to do all these pieces, and I'll be happy to help you. For us to work with entrepreneurs, you don't need to raise money. We work with entrepreneurs. We are probably the only accelerator who's happy to work with bootstrapped entrepreneurs. So not a problem.
Absolutely. Thank you so much. Thank you so much.
You're very welcome. Folks, if you like what we do here, we request you to let people know about 1Mby1M, and we work with serious entrepreneurs. If people are, dead set on, like recently, there was an entrepreneur who came and said that I'm going to build a competitor to LinkedIn, and I'm going to do 2 companies in parallel. I can't work with this kind of entrepreneurs. I just don't think this works. So, when I pushed back on his trying to do 2 companies and one of them is going to be competing with LinkedIn, he said, oh, why Elon Musk is doing it. Well, Elon Musk, I don't think would come to 1Mby1M. I don't think I can coach Elon Musk. So if you think of yourself as Elon Musk, please do it on your own. I don't think I'm the right person to work with if that's your attitude. And the reason I push back on that attitude is that this attitude of I know everything. So if you know everything, there's no reason why you should work with 1Mby1M. 1Mby1M is for people who understand and recognize that there are gaps in your knowledge.
True.
And first-time entrepreneurs typically have gaps in the knowledge. I've been there, and most entrepreneurs have to do a lot of very serious, very steep learning curve traveling. And what we have tried to do in 1Mby1M is make that journey smooth and efficient and quick. So if that's your need, please come work with us. If your attitude is you know everything, please don't bother coming to 1Mby1M. We don't want to work with you. You don't need us, we don't need you.
Yeah, I understand. I've seen a lot of people who are in the similar stage of mind. I understand. I understand completely.
There's tremendous arrogance in this ecosystem, and people, young people, think that they know everything, and great, if you know everything.
I think it's not only youth. I mean, a lot of people, even the elderly people, also have the same attitude when they start something.
Yeah.
Because
I have a very humble attitude towards learning, because we operate in a very fast-moving industry, right? There's constantly stuff going on and new things going on, new trends, new technologies, new tools. So we, as an organization, we are very much a learning organization. Culturally, we are very much a learning organization. We're constantly trying to learn new things. And so, there's tremendous humility in our organization vis-a-vis learning and vis-a-vis plugging knowledge gaps. So if I don't see that humility in entrepreneurs, I get very uncomfortable. And I think, you're bound to run into, huge blind spots if you're not willing to be open to learning and plugging your knowledge gaps. So here are tools with which you can plug your knowledge gaps. Go look at the blog. It's free. It's very good to follow this blog, and you'll learn a lot. The Entrepreneur Journeys book series is a set of learning tools that you can learn from. They are all available on Amazon. These roundtables happen every week. Next week is the 575th roundtable, so it's a very, very long-standing offering in the entrepreneurship ecosystem of the world. The premium program is our full acceleration program. So if you really want to work with me on a weekly basis and get feedback on a regular basis on your strategy, on how you're going about doing things, that's the best place to go. Go join the premium program and start doing the curriculum, start attending the weekly private roundtables, and I'll start working with you and fine-tuning your strategy. We help you with business development where possible, where we have the network. We help you with financing. You have to get to a point where you're fundable, but we do have a terrific network of hundreds of investors. Over 500 investors work with us all over the world. So investor and entrepreneur fit is something we emphasize greatly. And we also emphasize do not go to VCs as beggars, go as kings, right? So that's the core philosophy of 1Mby1M. This is the self-assessment that I was talking to you. So go do the self-assessment. You will have a good, proxy for due diligence, basically. And the reason I like this self-assessment is it's not just in terms of investor fundraising. It's also you are the first investor in your company. And you should do this due diligence. You should do the strategic planning, really rigorous strategic planning, so that you can build robust strategy on how you want to put one foot before the other. The bootstrapping course, if you haven't done it, it's a free, less than 1 hour course that's available on the blog for free. Please do it. It really is a very good articulation of our philosophy and of what's going on in the industry. We're very pragmatic people. We have designed 1 million by 1 million in response to what's happening in the industry. We're not doing something that is outside of the industry's norm. The industry wants validated businesses to fund. The industry doesn't, the industry rejects over 99% of entrepreneurs who seek financing. So bootstrapping is really important. Also, another source of learning material is our Udemy courses. You're very welcome to start there as well if you like. Some of you probably have started there. There are about 30 courses, 30 paid courses, another about, another 30 some free case studies just to get a feel for the courses. The full curriculum of 1M by1M, however, is not on Udemy. It is 1M by1M Basic. So if you want to really access the 1M by1M methodology fully, your best bet is 1M by1M Basic. So go dig around on the website, look at premium, basic, what to expect, video FAQs. The curriculum is described in a lot of detail. We work with case studies, just as you listen to Sujith's pitch, there's a proxy, there's a case study that is fully fleshed out in 1M by1M of exactly how EZCater became a unicorn. So we have a lot of these, case studies and blueprints and toolkits, so to speak, all over the program. And you can use those. You can follow other entrepreneurs. In some cases, you will do things differently because EZCater started many years ago. A lot of things that have happened in the industry. So you have a different set of options just because the industry has evolved. And there we can dialogue and we can come up with, strategy for addressing specific issues, whether it's customer acquisition issues, whether it's, advertising issues or, team, whatever issues. There's a lot of team building issues that have changed because of the pandemic and so forth. Investor introductions, we make a lot of, we put a lot of emphasis on investor-entrepreneur fit. So that's the concept that you need to understand. And as I said, do not go to investors as beggars, go as kings. Bootstrap first, raise money later, that's our mantra. And that is all we have today. In May, we have 3 more roundtables coming up. So if you want a slot, please let us know. Please register on the website, and Maureen will make sure that you have a slot to pitch. We can take more questions. We have a bit more time to take more questions if you want. So anybody who wants to ask more questions, please either use the public chat or dial in or use your computer audio. Those of you who have questions about joining the program, please feel free to contact Irina at 1M1M.com. She'll be happy to get on the phone with you, WhatsApp, Skype, whatever mechanism you want to use. She can answer your questions. All right, questions, anybody? Yes, no? I don't see any hands up. And I don't see any questions in the public chat either. All right, well then, I'm going to adjourn. I will see you next week. Thank you for coming today. Bye.